Assalamualaikum warahmatullahi wabarakatuh. Hello everyone, let me introduce myself. My name is Mohamad Habibie, NPM 2441201 from class Accounting 24A. Today, I will explain material about tangible assets. What is tangible assets? Tangible assets are long-term physical assets that a company owns and uses to generate revenue. These assets are not intended for resale but for operational use. Tangible assets support production, distribution, and service delivery activities. Examples include land, buildings, machinery, vehicle, and office equipment. Even top technology and intellectual property are increasingly valuable today. Tangible assets remain essential for maintaining business continuity and efficiency. Characteristic of tangible assets: 1. Physical form. They have a physical presence and can be seen or touched. 2. Long-term use. They are used for more than one accounting period. 3. Used in operation. They are essential for daily operation and not meant for resale. 4. Subject depreciation. Their value decreases over time due to use and wear except for rent. And 5. High initial investment. Acquiring this asset typically requires significant capital expenditure. Classification of tangible assets: 1. Land. Used for factory sites, office buildings, or warehouse. Land is not depreciated because it has an indefinite usable life. 2. Buildings. Structures such as offices, factories, and warehouses used for operations. 3. Machinery and equipment used in the production process, such as manufacturing machines and tools. 4. Vehicle used for transportation of goods or employees. 5. Furniture and fixtures, office desks, chairs, shelves, and similar equipment. And 6. Leasehold improvement. Improvement made to leased property that benefit the company during the lease period. Recognition of tangible assets: 1. It is probable that future economic benefits will flow to the entity, and 2. The cost can be reliably measured. The initial cost of a tangible asset includes all expenditures necessary to acquire and prepare the asset for use. Examples of recognizable costs: there are: 1. Purchase price, or after discount. 2. Import duties and tax. 3. Transportation, installation, and testing costs. 4. Professional fees. 8. Or architects, engineer. And 5. Preparation and construction costs. Costs that do not enhance future economic benefit, such as maintenance or repair, are expensed immediately. Measurement of tangible assets: A. Initial measurement. Tangible assets are initially recorded at cost, which includes all costs incurred to bring the asset in its working condition and use. Example: journal entry, amortization expense, amount, cost minus residual value. B. Divided usable life. B. Subsequent measurement. After recognition, a company can choose one of two measurement models. 1. Cost model. Carried at cost list, accumulate depreciation and impairment loss. 2. Evaluation model. Carried at fair value at the date of revaluation, list subsequent depreciation and impairment evaluation must be performed regularly to ensure that the carrying amount does not differ materially from fair value. Depreciation of tangible assets. Depreciation is the systematic allocation of the cost of an asset over its useful life. It reflects the decrease in value caused by wear, usage, or obsolescence. A. Depreciable amount. The formula is depreciable amount cost minus residual value. Depreciation methods. Several methods are commonly used. There are: 1. Straight-line method. The formula is depreciation expense amount cost minus residual value divided useful life. This method spreads depreciation evenly over the asset's life. 2. Declining balance method applies a constant rate to the asset's book value each year, resulting in higher expenses in earlier years. 3. Units of production method based on the asset usage or output instead of time. Land is not depreciated because it generally has an unlimited usable life. Impairment of tangible asset. An asset is impaired when its carrying amount exceeded its recoverable amount. The higher of fair value less cost to sell and value in use. Step in impairment. There are: 1. Estimate the recoverable amount. 2. Compare it with the carrying amount. And 3. If carrying amount bigger, recoverable amount to record an impairment loss. Impairment ensures that the value of asset in financial statement reflects their actual economic value. Subsequent expenditures. After initial recognition, expenditures related to tangible assets must be classified carefully. There are: 1. Capital expenditures added to the assets carrying amount because they increase capacity of machines or useful life. Example: replacing a machine's major component. 2. Revenue expenditures expensed immediately because they only maintain the asset's condition. Example: routine maintenance or repair. Disposal of tangible asset. When a tangible asset is sold, exchanged, or retired, it must be derecognized from the financial statement. A. Journal entries for disposal. 1. Remove the asset and accumulate depreciation. 2. Record cash received and recognize gain or loss. Component accounting. Under PSAK 16, if an asset consists of significant parts that have different usable life, as parts shall be depreciated separately. Example: an airplane might have two main components. There is: 1. Airframe, 20 years life. Engine, 10 years life. Each component must be recognized and depreciated independently to provide more accurate financial reporting. Disclosure in financial statement. 1. Measurement-based usage or cost or revaluation. 2. Depreciation method and useful life. 3. Gross carrying amount and accumulated depreciation. 4. Reconciliation of carrying amount at the beginning and end of the period. 5. Information on revaluation, impairment, or restriction on ownership. These disclosures provide transparency and help users evaluate the company's operational efficiency and asset management. Importance of tangible asset management. Efficient management of tangible assets ensures that the company there are: 1. Uses assets optimally to generate maximum output. 2. Avoid idle or underutilized resources. 3. Plans timely maintenance and replacement. 4. Minimize lose due to impairment or obsolescence. And 5. Providers acquired asset valuation in financial statement. Poor asset management might lead to operational inefficient, inaccurate financial reporting, or unnecessary capital expenditure. Tangible asset in modern business context. Even as business increasingly rely on technology and digitalization, tangible assets remain crucial. For example, first, manufacturing requires machinery and factories. Two, logistic rallies and warehouse and vehicles. And third, retail stores depend on physical outlets and inventory systems. Moreover, technological advancements such as automation, robotics, and green energy are transforming how tangible assets are utilized and valued. Modern accounting practice emphasizes sustainability and environmental efficiency, where asset management must also consider energy consumption and environmental impact. Renewable assets play a central role in supporting business operation and ensuring long-term profitability. Understanding the recognition, measurement, and depreciation and disposal is fundamental in the intermediate financial accounting. Therefore, tangible assets are not only essential component of a company's balance sheet but also critical instrument in achieving sustainable operational efficiency and financial success. That's my presentation. If there are any mistakes in word or action, please forgive me. I end it here. Wassalamualaikum warahmatullahi wabarakatuh.